Hello, everyone, and welcome back to the J22 Report. I'm your host, Johnnie Market, and I just wanted to get into a couple of things, macro and then others. But first, when I talk about the Fed, I emphasize how they manipulate the psychology of the markets more than anything. But if you look at today, nothing is more apparent about the manipulation of psychology than what happened today. And this was shares of New York Community Bank fall more than 20% after bank discloses internal controls issue. And of course, this was published at 4:30 when the markets closed, so it wouldn't affect the market. And if you look at it, this is the banking crisis that's coming. And it's probably going to come next year. And will there be bailouts? I don't know. They might be bail-ins. But here's the thing that stood out to me. As part of management's assessment of the company's internal controls, management identified material weakness in the company's internal controls related to internal loan review, resulting from ineffective oversight, risk assessment, and monitoring activities. Well, if you ask me, that sums up the U.S. markets. They're not pricing in any type of risk. Credit card debt is rising rapidly. Not just debt, but bankruptcies. Auto loan bankruptcies are rising rapidly. We have a huge commercial real estate bubble. And none of this is really being priced into the market. And I don't think it will be priced into the market this year at all. I think it's gonna continue to go up, and it's going to, for the next couple of months, continue to go up. It's already made new all-time highs, but continue. I see a top around 5,400 or 6,000. That's what it looks like. But just want to get an example. But also, this bank crisis, it's not going away. It's going to come back. So anyway, that's the first thing I wanted to get into. Second thing is Fed Mr. or Meester, whatever her name is, expects 3 rate cuts after the PCE gauge. I was looking at that, and it looks like they're going to start cutting rates, and I think that will be bullish for gold. The gold chart looks good. I'm not a technical analyst, but very strong. It's just looking for a catalyst. And I just want to go over the economic data, and I think they're anticipating bad economic data. Like if you look at the core PCE price index, that was up 4% over the month. I think we're going to continue to have inflationary problems. If you look at the personal income month over month, that was only up 1%. The consensus was 4%, so that was a very poor reading. Initial jobless claims, this is unusual, but that was higher than expected. 215,000. This is 210. PCE price index on a month over month basis, that was at 3%. And this is what the Fed's talking about. PCE, it was 2.4%, and they say that's closer to their 2% mark. So that's why they're saying it. I think it probably will get to the 2% nominally. Then it'll probably go back up. They need an excuse to cut. I think the next wave of inflation will come shortly after cuts. Like I think they'll begin cutting rates in not March, maybe June, or maybe March. March is next month. Well, it's tomorrow actually. But I'd probably say in June, and they'll probably have 3 rate cuts this year. That way it doesn't seem too political. But if you also look at the other data, Chicago PMI, that was at 44. The last reading, the consensus was 48. That's a very poor reading. Look at pending home sales. On a month-over-month basis, negative 4.9%. Negative 8.8%. And there's a lot more inventory coming on the market. You don't see that low inventory story anymore. It's because more is coming on. The problem isn't inventory. It's not expense. Right now, prices are too high. Prices have to come down, and they will come down starting probably. A lot of I remember it was like an astronomically amount of people that bought houses last year are underwater now, and a lot regret buying homes. So, and then the Kansas City Fed Composite Index, that was -4. That's another poor reading. Now the manufacturing was 3, but that was last month. Was the previous was -17, but the composite index, that's negative. So if you look at it, this is very poor data. And maybe this will give the Fed an excuse to start cutting rates. This was very, we'll see what happens tomorrow. I'll be there, same J22 report channel. I can't say same time, but yeah, this is very poor economic data. Of course, one day doesn't make a trend, but you can see the data. I'm covering the data where it's good or not, because this is what's going to propel gold into a new bull market. The real economy is poor, but on paper it's not. So that's what I wanted to get into. And yeah, I think when they start cutting rates, inflation will start. You have to remember, inflation comes in waves. It doesn't come all at once. So the other thing I wanted to get into is this story just had me depressed. If I sound a little upbeat, is this. Now, if you wanted to trade like the congressman, they have a new ETF that trades, and it mirrors the trades that congressmen do. So the ETF for the Democrats, which I'll post the article to this. All these articles I'll post below. Unusual Democrat ETF, I'm reading from the article, which trades under the symbol NANC. In a nod to former House Speaker Nancy Pelosi, has surged 30% since its launch in February of 2023. That compares to a gain of 24%. So anyway, it's outperforming the S&P. Yeah, well, if we got to trade on inside info, we could perform like that too. So, but anyway, let's go. I'm gonna go on it. NANC. So the biggest holding, 8%. Top 10 holdings. The biggest holding is Microsoft. Second biggest holding is Amazon. Third biggest holding is Apple. Fourth biggest holding is NVIDIA. I'm surprised. Thought NVIDIA would be number 1. Fifth biggest holding is Salesforce. First American Government Obligations X. That's the next biggest holding. Google, Alphabet, Netflix, yeah, CrowdStrike, and go figure, Walt Disney. That's another holding. So anyway, that is the Democrat. Now there's one for the Republicans too. And here's KRUZ, which isn't performed as well, of course. They don't have as big of a donor class. I mean, they're both huge, but Intel, that's the Intel Corp, that's number 1. Number 2, NGL Energy Partners. Number 3 is ConocoPhillips. Number 4 is Shell, so they obviously love oil. Accenture, Elvalence Health, sorry, I don't. Comfort Systems UFK, Cleveland Cliffs, which I believe is an energy company. Of course, they have Amazon, and then they have it's a steel, and then the next one is Chevron. So anyway, those are that's what I had to do today. Is this banking crisis? It's coming, and you can see a lot of this, and this New York Community Bank, I bet you it's a lot more coming. But anyway, that's all I have to say. Hope to see you next video, and if you like that video, Like this video, hit that like button, and subscribe if you already haven't.